Hi, I'm Lauren Taylor, Managing Director of Active Property Group. In this video, I'll provide some information about the types of investors that can invest in our pooled mortgage fund. But first, what is a pooled mortgage fund? A pooled mortgage fund is an investment vehicle that pulls together funds from multiple investors to invest in a portfolio of loans. The fund manager is responsible for selecting and managing that portfolio of loans. Investors receive a distribution based on the interest paid by the borrowers in the portfolio during the quarter. At Active Property Group, when you invest in our pooled mortgage fund, your investment is diversified across a portfolio of about 30 different loans at any given time, and each loan is secured by a mortgage over a security property. Who can invest in our pooled mortgage fund? When we talk about investor categories, we're usually talking about whether someone is a wholesale or retail investor. A wholesale investor is a person or entity who has obtained an accountant certificate in the last 6 months stating that they have either $2.5 million worth of assets or an income of at least $250,000 for the last 2 years. You can also qualify as a wholesale investor if you make an initial investment of over $500,000. A retail investor is anyone who doesn't fit the wholesale investor criteria. Our pooled mortgage fund is open to both wholesale and retail investors. So, what's the difference between investing as a wholesale investor or a retail investor? Whether you're a wholesale investor or a retail investor, you can still invest in our pooled mortgage fund, and either way, you'll be invested in the exact same portfolio of loans. However, there are two key differences between investing as a wholesale investor or as a retail investor. The first is the minimum investment amount. At Active Property Group, retail investors can invest in our pooled mortgage fund with a minimum investment amount of $10,000, whereas wholesale investors have a minimum investment amount of $25,000. The second difference relates to fees. The key difference between investing in our wholesale fund and retail fund is that retail investors are required to pay a 0.5% per annum trustee fee. This is because our retail fee is operated by an independent trustee called Primary Securities Limited, and this fee covers their services. This fee is withheld when distributions are paid. So if we announce a 9% per annum return, then as a retail investor, you will have an 8.5% per annum return paid to your bank account. There are no other fees for either wholesale or retail investors. Another question we get asked is what type of entities can invest? We can accept investments from an individual or joint individuals, a trust, a self-managed super fund, or a company. Each entity type has different onboarding requirements, which generally means the documents we need to collect from you before you invest. We have to collect certified IDs from all investors, and for trusts and super funds, we also need certified copies of your trust deed. If you'd like more information about the differences between wholesale or retail investors, or would like to know more about the onboarding process, then get in touch at investorrelations@activepropertygroup.com.au. Thanks for watching and see you next time.